We're pretty bullish on the euro still. There's a lot of noise, a lot of volatility. You touched upon a lot of that earlier today, and the US side of the story is also worth bearing in mind there in terms of what the Fed's doing, everything else. But ultimately, when you look at the broader picture in Europe, I think there's still a lot of reasons for optimism. When you look at the cyclical growth momentum going into the summer, when you look at the rebound in terms of the external balances, you touched upon investment, I think, Karen, there, maybe more on the long-term side, but the short-term investment story in terms of money coming into equities and bonds is really positive as well. So I think as long as you see those signs continuing, then yes, we'd be expecting euro to start to base here and actually move higher through the course of the summer.
That optimism doesn't seem to match the technical recession we're seeing in Germany at this point, Dominic. It is the Eurozone's largest economy. How do you factor that into the maths?
Yeah, look, I think it's certainly been sort of disappointing in the short term. But if you go back to just a few months ago, the idea of a recession, not just in Germany, but absolutely across Europe, and a very, very damaging one, was very much in the price and factored in and part of everyone's thinking. So a lot of the economic outcomes we've seen in Europe have actually been a little bit better than people feared they were going to be. So in absolute terms, this isn't a brilliant story that we're talking about, but in relative terms, compared to what was expected and compared to where we were at the back end of 2022, I think there is still some reason for optimism. And as I said, I think what's also interesting in this environment, yes, Germany is suffering, but actually some of those smaller peripheral economies, they seem to be doing a little bit better. And that might be the way in which the economy is reacting to a relatively cheap currency. In the past, the way the European economy reacted was great for manufacturing, great for exports. Well, actually, maybe things are shifting. If you think about the recoveries we had around the world post-COVID, a lot of it's been more services based. So we think that kind of tourism angle, particularly for the euro, could be a really positive driving force. And it could be those periphery economies that actually show a bit more positivity.
Dominic, there was a time when we used to talk about a lot of politics impacting the trade, whether a various country or another was going to exit at some point, the role of populist politicians in terms of derailing the European project. What's in the price now when it comes to politics, and how key could the Spanish story be at this point?
Yeah, it's always quite tricky to really put your finger on just what's priced in terms of politics. I do think that with European politics, there are so many moving parts when you go from obviously the national level all the way up to the kind of pan-European leadership, that there are so many things to factor in. It's quite hard for the market to really effectively price all of that risk particularly closely. So look, things could still change. And obviously, as you say, that the potential change in terms of European presidency, that maybe can have a bit of an issue, but I think we're talking about longer term drivers here. This is not something that changes the course of the euro over the next 2 or 3 months. This is a sort of decision, and this is part of the infrastructure and the institutional decision making that potentially does impact where things are in terms of investment over the multi-year horizon. So in terms of that shorter term investment horizon, it's quite tricky to really pin it down, and I wouldn't be seeing it as a huge driving factor in the short term.